what does Apple all-time highs mean for the stock market? You might have seen it right before the big Apple announcement of the cool new products that they have coming out in the next year. The Apple stock makes a new all-time high, just barely paints that new high above where they got to right at the start of 2022. You'll remember that Apple made new highs, Microsoft made new highs, and the S&P 500 made new highs, because Apple all-time highs usually means all-time highs for the S&P 500. You have here in red the S&P and in black Apple. And yeah, right before they announced the new hot topic VR headset that they're coming out with that costs $1 million. The stock makes a new all-time high. And interesting about this, it didn't coincide with an all-time high for the S&P 500, which as the biggest holding in the S&P, which is to a lot of people a huge metric of how our economy is doing. It is, to most people, myself included, the stock market. The S&P 500 is. Its top holding, Apple at 7.5%, makes a new all-time high. And you look at any of the all-time highs in that black line since, I mean, this entire chart really coinciding with an all-time high in the red line as well. If you pick out really any of these instances, you'd be hard-pressed to find one where Apple is making a new all-time high and the S&P isn't. And so what does that mean? Well, that means that there's a lot of laggers here in the S&P 500. You're seeing now more than ever the top performers, Apple, Microsoft, and a few others, hitting some of those all-time highs. Microsoft is very, very close to their own all-time highs. And the S&P and the NASDAQ, and especially the Dow Jones and Russell, they're lagging behind their all-time highs, as the stock market at large is not quite there. And you know, this really tells you all you need to know, which is Apple up 45%. And that's accounting, that move alone is worth more than 3% of up move in the S&P, and the S&P is only up about 10% this year. So you get a 45% year-to-date move in your biggest holding, and it's not enough to lift the S&P 500. Of course, the math is the math. It lifts it 3.5%. But what I'm more getting at is that the rest of the stock market not correlating to the type of momentum that Apple is seeing here. And I wanted to break down the sectors that are leading the way and lagging here. Because, yeah, you see Apple, you know, new all-time highs, usually correlating to all-time highs in the S&P. You've got it. It's the top weighting in the stock market at 7%. But, you know, what else is doing well, and what is holding this stock market back here from making those highs? And can these poor performers close the gap? Well, you know, you can be the judge of that, and you can shift your retirement funds or your trading activity thusly, because you see here the energy sector, XLE, the financial sector, XLF, and the healthcare sector, XLV, trading in negative territory here in 2023, the same time frame that Apple is up 45%. You've got whole sectors performing in the red, and then you've got the top holdings for XLE being Exxon, 23% for XLF, the financial sector being JP Morgan at around 9%. That XLF is very well diversified, and obviously the regional bank crisis news dragging on that financial sector. And then healthcare there at United Health, 10% of that ETF. And so, you know, can these poor performers close the gap? If you think so, that might be reason to double down and maybe not only, you know, get long the S&P 500, but also pour some extra funds into individually XLE, XLF, XLV. If you're not so convinced and you think that this historic run that the top holdings in the S&P 500 have had, and your Apples, your Microsofts, and everything else, that will continue. Then maybe you go the other way and you not necessarily diversify or buy up the poor performers, but you get longer those outperformers being XLK. That's a sector ETF for technology that's not far behind the single stock of Apple, up over 30%. And the top holding there is Microsoft. Apple's right there as well. Those two stocks making up almost 50% of the technology sector. And then I thought it was interesting here, looking at XLC and XLY, the two other very well-performing sector ETFs, and XLC is communications, and XLY is, I believe it's consumer discretionary. I get XLY and XLP mixed up. And when I first generated this chart, I was like, oh man, of course I expected technology to be up there, but communications and consumer discretionary, both up over 20%. What stocks, communications I'm expecting to maybe see, like T-Mobile or something like that. No, it is essentially tech stocks by a different name. You have Meta, 26% of XLC, and Amazon, 26% of XLY. And so, of course, I've painted this in a, will the laggards make a comeback and close the gap? Will the concentrated top fall? Or, of course, it can just continue to diverge. This is a story that has actually been developing for years, where if you invested in 6 or 7 names, the top names of the S&P 500 a couple of years ago, those top names are outperforming the other 493 odd S&P 500 stocks by a lot. And so that can continue to widen, or this gap can be made up. Something that I always like to bring up is people like to use sector rotation as a buzzwordy event all the time. Oh, we're seeing sector rotation today into small caps out of large caps, which sure you do see on a day-to-day basis. But something that I always hold on to when people might think that this is just the new normal, Apple's going to take over everything, Microsoft's going to take over everything, and Amazon's going to take over everything, Google as well, those top names, is we have yet to see a top 5 stocks of the S&P 500 in its storied history remain the top 5 stocks for more than a decade or so. It's actually a real fun exercise, and I'd ask anybody out there who's interested to do some Googling one of these top names. But if you do Google around, what are the historic top 5 holdings of the S&P 500, almost every decade is going to tell you a different story. There was a run that energy was on for a while where the 3 or 4 of the top 5 holdings were energy stocks, and people probably at that point were like, wow, these energy companies are just going to always hold this status. Things change, the sectors rotate all the time, and so here are all the stats of what this big move in Apple means for the S&P 500 at large, and what the current landscape is, and you can adjust your portfolio how you see fit by either thinking this gap will continue to widen, thinking it will contract, or you can also, of course, the third option, just stay passive in your S&P 500 investment of all of them, though I guess that is top heavy as well. So we'll see how the economy continues to develop as its top few pieces are holding it very, very strong.